All right. Good afternoon. Good morning, depending on where you're coming from. This is Trendy John from Simpler Trading. Let's go ahead and get started with this week's broad market analysis. So today is the 21st of January. I'm just coming back from my cruise. It was my first cruise ever, and I'll be letting you know what my experience was when I get into the room yesterday. You might be pretty surprised. Anyways, we are covering tonight when the futures open all the way until the 26th. We do not have any holidays this week. Let's go ahead and get started. Very happy to be back. So, getting started here, we'll go over this week's major U.S. economic reports and Fed speakers. And as you all know, I'm a professional supply and demand trader. What does that mean? That means all of these different catalysts that I'm showing you on here, it's very important to understand that they are catalysts that push this price into supply and demand. All that simply means is we are identifying highly probable levels that we are using structure. All right. And I'm teaching you how to find that structure. And then we align ourselves with that higher or that bigger money, the institutional side. Okay. That's what we're looking for. And so it's very important to understand when these events happen, but it's also important to understand that you learn how to trade these things and not sit on your hands. So again, any of these things that I talk about could be a leading factor why we get in or out of something because it pushed price into that structure, not the news catalyst itself. So on Monday, right now, as in 10 a.m. Eastern time, we are looking at US leading economic indicators. And then on Tuesday, there's nothing scheduled. Wednesday, we have S&P Flash using PMI and PMI. So again, 945. And then Thursday, scrolling down here, we have Q4 GDP preliminary initial jobless claim. So Thursday sounds like it could be a fun, hopefully some volatility comes in on the market. And then Friday, we have personal income, PCE index, core PCE year over year, and pending home sales. And let me get my drawing tool out here because I'm sure we're going to use it. Let's go ahead and move into this week's earnings. So, I'm right back in time. I have to say before I get into this, I was really looking forward to being able to go away on holiday and come back and realize that we got an opportunity in the market. And when I say opportunity, perhaps a little bit deeper of a pullback. Usually my timing is perfect this year. I wouldn't say that it was perfect. It sounds like you guys might have had 2 or 3 days of a minor pullback right into some support. And then I come back and we're at all time highs. So, this is kind of one of those weeks where I feel like I'm maybe coming back into a bigger dip buying opportunity. We'll see how that works out. I was really hoping to get some prices a little bit cheaper, but again, the market really ran itself. So, anyways, earnings for this week, and these are the names that I'm interested in. You may be interested in other names. I use Earning Whispers out there on X, and you guys can find them at right down here. You can see they are Earning Whispers. All right. And then on Tuesday, this is the biggest day for me. I'm going to try to zoom in here, if you will. Netflix is something that I'm interested in. Texas Instruments, ISRG. And then as we move on here into Wednesday, this looks a little bit more appealing. We have Tesla, IBM, NOW now, and then LVS, Las Vegas Sands. And then we have LRCX. And then on Thursday, American Airlines, Intel, Visa, and then let's see, I underlined Humana and then American Express on Friday. So I don't think it's overly exciting, but we obviously have two important names there that, tend to really make big moves, and that would be Netflix and Tesla. So, of course, looking forward to that. And we'll go over Tesla. I'll probably do a quick 2-minute video tonight to talk about Tesla and put it out on my X account. Because I have been waiting very, very patiently. I noticed that I was not executed while I was on leave, which means that price did not get down into about 195 where I was looking to go long. So we still have some room there, and we could see that into our earnings. All right, moving on down here. So this is the SPY QQQ neutral strategy that I give out to you guys every week, and this is something you get to see here on YouTube. And again, once you watch this video, please give it a like because again, this lets me know that you like the content that I am presenting to you. I'm very straightforward. We don't go into fundamentals. I'm all technical analysis here by using supply and demand and Fibonacci's and all that great stuff. And what I'd like to do is show you the proof of concept by showing you the before and after. I give you these charts far in advance, all right, which is really important for you. It gives you time to understand how much you're going to risk, what are the targets, and so forth. So notice here on last week's neutral results notes, the overall trend stayed true. And again, the bigger picture has stayed intact. And I think that's what's most important about what we're seeing in the market. And again, I've been giving you some hints out there on X, but if you're a member here at Simpler Trading, then you know that I'm really concentrating on the quarterly chart and the annual chart because I believe a lot of people are going to get spooked and there are going to be some bigger moves later on in the year. And if you don't know where those levels are, then you too could get shaken out of some very important trades that really are probably just pushing price into a demand zone. Now, I see the lower neutral was broken and SPY hit, so I need to put this in. Give me 1 second here. We're going to put this, give me 1 second as I pull this up. Let's go into right here and we're going to go to, and I keep all of these. This is what is really neat about the neutral strategy is I put this together a long time ago and it was built for traders who are on the go, who don't have time to look at charts every single day. And if you're one of those people, then this may be something that you find very interesting that you can trade from home. And it really gives you the flexibility to be able to do the things that you really want to do and be able to trade. All right. So what I'm doing right now is I'm looking through my dates here and I am looking for our last one, which was I want to say it was the 16th. Yeah, right there. So there's the 16th and let's pull up this one. All right, 116.24. There we go. All right, so this is currently on the day, and what I meant was when I went on my cruise, I was looking forward to maybe coming back and finding price maybe, in these lower levels down here, but we didn't quite pull back. But I do want to show you a couple things, especially for those who are strictly trading supply and demand, and kind of show you where we came into. You might be surprised. The SPY did come into demand, it looks like. So again, this would have been Monday, Tuesday, Wednesday, Thursday, Friday. And I can see if you guys had a hard week out there, just any trader out there, if you had a hard week and you thought, hey, maybe this is the time for me to go short or this is the big pullback, and you found yourself getting short on the lows. And then, I mean, really, you had a very big rip there. And I remember, I had some coverage going into where I was. And I was looking at the market and I was really impressed on not only Wednesday's push, but then Thursday and Friday just ripped. And I hope that you got the opportunity to trade that. I think there was a lot of happy traders out there, but I'm sure there's a handful of traders that are like, what happened? Why wasn't I able to jump on this type of trend? Now I'm going to zoom in and I want to show you a couple things. This is a box that not only did I identify demand in, but if you notice, if we look at there's three ways to draw a demand zone. There's like a conservative approach, there's more aggressive, and so forth. Aggressive would have been using this wick of the inside and drawing this green box, and it would have looked like this. Now, I went with the approach where I drew the box, primarily just using the base, just came up a little bit above that. And you guys can see we didn't quite get down into that, but just looking a little bit closer, you can see we did come into demand. So I hope that a lot of you were able to catch on to that. So we came into target 2 to the downside. Once we got the trigger to go short, if you went short here, you can see that we did hit our lower T1 and T2. We got very close to the lower trendy edge. And again, when you're low on the curve, guys, so looking at the upper edge and the lower edge for this past week, when we are lower on the curve, meaning closer to that lower edge, we're looking to go long. We're not looking to go short. All right, especially in an uptrend, especially when the clouds are holding and so forth. And again, what came out of that? A rip higher. Now, this rip higher making a new all-time high, higher highs, higher lows. This is most definitely an uptrend, and I'm sure you're going to hear a lot of people out there talk about, well, the divergences and the RSI and all the indicators that most people use. And as I always say, if you're using the same indicator that everyone's using, and it's free, there's probably a reason why it's free. If 90% of traders are thinking the same way, and 90% of traders are losing or not doing well, then you have to stop and think maybe there's something about this. All right. Supply and demand has been around. It's nothing new. I didn't invent it. I just found an easier way to trade it. And I have to tell you, it is by far the one tool you should be looking at. So if you're using anything else that's kind of helping you, but on days like Wednesday where it wasn't helping you, I really encourage you to learn about supply and demand. All right. So again, this pushed through. And what was really impressive about this when we view it from this perspective, this would have been your inside and down. So this would have been your supply zone. Now, when we came up on Thursday and we hit the supply zone, we did back off like we were supposed to. But if you guys all recall, when I'm teaching you, and what we call this is the bear house supply zone, okay, is when we enter the bear house, they can push you out at any time. But as long as you can hold this entry line here, you stay long. The overall trend is long. We're above the EMA cloud. We're making new highs. There's no reason for you not to be long. Now, when you're looking at this strategy, just saying, hey, okay, well, if you didn't get long down here, all right, and you waited this entire time to get long, you still did okay. So don't be mad. So if you went long at 478.66, but not down here, sure, you missed $8 of a run. But if you went long here, guys, you can see that you got T1 and you almost got T2. Overall, when I look at this, I think, wow, it did really well. When I'm looking at the QQQ, it's a little bit different of a story. The green box is way down here. It's been leading. And when I say leading, well, it came down. It gave you an opportunity to go short once it broke the lower level. It did see T1, and you guys can see it almost got into T2. It turned around very quickly. Now, there's one thing to take away from here, especially for my members. If you guys look here, we flushed the mid trendy edge. So looking at it from a daily perspective, it turned into a hammer. Again, SPY came into demand over here. And if I were to break down this candle, most likely what I'd find in here is some kind of like 3-hour demand zone. We came right into there. We never broke down below the cloud. We bid it above this cloud once again. This could have been your long as well. And then again, it's okay. If you didn't get long down here, if you got long at the 411 level, guess what? You still got pushed almost $10 from that level. So I'm really, really looking forward to hearing how many of you traded just the neutral strategy. And again, this strategy is built for you if you don't want to be in front of the charts all day. All right, don't overthink this. We're long above the green, short below the red. Place your limits or your covers at the targets that are presented on these charts to the upside and or downside. And in many cases, you could find yourself not only going short, but also making money on the long side. And you can see that in both these charts here. Okay. Now let's go ahead and minimize that. We'll go back here. And this is going to be your SPY and QQQ. Note, this is for this week. All right. This is where you want to pause the video. Don't forget to give a like to this video. Don't forget to share with your friends and family. You may have friends that you met other places who are having a hard time trading. Don't forget to tell them about trendy methodology. You can see it right here at simplertrading.com. We will be happy to teach you all these things, okay? Now, this is the new SPY and QQQ neutral strategy for this upcoming week. Same thing. Now, a couple things that I wanted to note this week. The upper T3, they're a bit wider than normal. So it's possible price can turn between T2 and T3, meaning target 2 and target 3. All right. So again, this is where you freeze the screen after I get finished and you come back and you can put these levels on your charts. Same thing. And all I'm saying, you'll notice that the difference between target 2 and 3 are pretty wide on both of these. So just understand that price could push up in here and at any point could turn around. And there's a lot of signs that we teach right here in the room, how to be on top of that and not get smashed. Okay. And so we'll talk about that if we reach up into those levels. Now, as far as this week is concerned, looking at the charts themselves, okay, and if you were to look at the reaction to last week's chart and inside that demand zone. Now, I want to make sure that you understand it does not have to come all the way back to the green zones in order for us to get long. The one thing that I would tell you to concentrate on, and again, these are daily charts, all right, is the fact that we are above the cloud. So, for example, the SPY, you can see that the cloud, the EMA, the 9 EMA is in line with my target 2 at 475. It's basically 476. And then that the lower portion of this cloud is actually confluent with a demand zone. And you can see the same thing over here on the QQQ. All right, so these are in line with the target, and the lower portion of the cloud is in line with demand. So I personally, especially going into earnings again, big names, I don't see prices breaking down below these green zones. So right now, it's still buy the dips sentiment. You just got to understand where is the best opportunity to buy that dip. And for me on the SPY and QQQ, it happens to come in at or around those 9 EMAs. Okay, so again, if we were to break down, then I would be looking at buying at least at the cloud if it were to come down into there. Now, again, don't get that confused. The neutral strategy, basically, this is like, a no brainer. You don't think about it. What you think about is the risk that you're putting on. All right. So, for example, if I'm going long here and I'm going long above the box and I want this to be a swing trade, my stop is below this red line. Okay, so this again, this is the type of trade where I want to get in it and I don't want to look at the charts every 5 minutes. I want to set alerts at the targets to the upside. And again, I have a video on my YouTube page that you guys can watch to help you understand how to take this trade. And again, listen to me. All right, I can sit up here and show you 100 charts like a lot of people do out there, but I am giving you a strategy of entry, stops, and targets. Okay, that's what's really important for you to understand about this. So, for example, if I take this trade, okay, and I go long here and I get an alert on my phone that we're at 485.05, or if you want to come down a little bit and you get alert, that lets me know, hey, I want to take some off here, whether you're trading equity, options, it doesn't matter. All right. And then I want to pull those stops up. For some reason, I get an alert that we break down below this red line here. Then if I want to go short, then I want to set my alerts at these. And again, I want to cover that short at those targets. All levels to the upside are resistance until proven otherwise. All levels to the downside are support until proven otherwise. Overall, this is an uptrend. So I want to be looking at buying the dips until those clouds break or those demand zones break. And we'll be talking about the different imbalances that we find on the lower time frames here in a few minutes. One thing that's really, really important to take away from this week, we do not have supply up and to the left. Supply and demand traders, just really quick, and for anybody that is tuning in and listening, very important for you to understand. Typically, we have candle structure, okay? And let's just say this candle structure looks something like this, and it takes its time and it moves to the upside, and then we have a big breakdown. Um, Say we get something like this. Now, what's happening is the whole time that we're moving up, we're looking up into the left and we're looking for structure. And I may say something to you like, hey, supply zones are up here. Please be cautious when we get there. Pull those stops up, take your profits. But guess what? We do not have structure up and to the left. This is what we call open blue skies. All right. So again, blue skies, we're talking, let's put a cloud over here. It looks like this, right? We are just absolutely euphoric right now. Nothing can bring us down, right? It's just straight up. And every once in a while, we might come back to the cloud. We break down, people panic. I told you the market's going to crash. Next day, this happens right here. And this is where we are. And when we get here, these levels that I'm giving you to the upside, well, they're just Fibonacci extensions, guys. Price can keep going. It can turn anywhere it wants. Fibonacci extensions work really, really well. And if you don't know how to place them, I also got a video on that as well. These are really important to understand. There is no supply. Price can keep pushing if it needs to. Okay, moving on down, we're going to get into SPY, the bigger picture. Let me go ahead and pull up TradingView. All right. Now I put this out on X as well, so really important to understand. If you go out here on X and you come over to my profile, and again, guys, I really appreciate your support out here. Any kind of likes, retweets, that kind of stuff lets me know that this free information that I'm giving to you, that you really appreciate it. So don't even, I mean, if you're on YouTube, Follow me over here as well. You get to see a lot of other stuff that may not be on YouTube, okay? So, as far as today is concerned, you guys can see right there. See, there's 445 of you taking a look at this. Some of you are loving and appreciating. And again, if you get time, please give it a like and retweet it. Now, all this information is out there for you guys to see, and I put the notes on there. And I tell you what, listen, I'm not being biased, man. I'm not getting anything from this except a little heart, and it makes me feel so good. But I hope that you're getting something from it because the bigger picture is where it's at. I can't listen. I take pictures. I take pictures on my phone so that I can remember how much bad information is pushed out there off of X when it comes to financial or technical, I should say, technical analysis. 3 days into January, listen, everybody was bearish. Everybody was like, Steve, this is not right. Januaries don't start off like this. Everything shows that we're going down, man. I mean, seriously, right? And what were we doing here, right, at Simpler Trading inside the Trinity Room? We were saying it was what? We were finding levels of demand, we were finding confluence, and we were talking about getting long. So, yeah, we tend to be a little early sometimes, and then we can say, hey, we're kind of selling to the people who are finally getting in. But man, this market is strong. And there's a lot of things looking back. You're like, I wish I would have just held that AMD, NVIDIA, those type of trades, right? So the bigger picture is, and what I want you to really wrap your mind around is everything that I teach you is fractal. Okay, so if we're on a 5 minute chart right now, and I were to tell you, hey guys, let's stay in SPY as long as the 23.6 of the rally holds, and as long as the cloud is holding, I want you to stay long. Well, you don't change the rules just because of a time frame. What changes is your overall, like, your mind, what's between your ears, your patience. You have to be a different trader for this type of chart. But nothing else changes. All right? Nothing. You have to change. You have to grow up. You have to become a little bit more mature and allow things, right? Allow things to work for you, right? You don't have to micromanage it because I promise you, the market doesn't care if you're staring at the screens. All right. But this is what I'm seeing on the quarterly. First, it's really important to understand that everything I'm telling you on this chart, we still have 2 months and 7 days before this candle even closes. So I could be super bullish today, tell you we're headed to, 496.58 here on the Fibonacci extension, and I'm just pumped up, and then by 2 weeks from now, we're all the way back down here at this demand zone, which happens to be right around here. And we'll talk about that here in a second. And then you go back and you go, well, I remember John talking about this, but listen to you. I'm always going to give you that if this, then that. Okay. So going forward into these notes, and I love to keep these so that you guys can judge me off of the analysis that I'm giving you every week. As far as this week is concerned, on January 21st, 2024, the new all-time high was established. I'm using 465 by 454 as a new support. All I'm doing here, everyone, is I am using a quarterly, okay, a quarterly Fibonacci. I'm using it from right here to right here, and it doesn't have to be perfect. The 23.6 and the 38.2 are the levels that I just placed in here for you to understand that, okay, right there. And buying opportunity at 444 by 440. Now, the reason that I say buying opportunity is just in case the support doesn't hold. I'm looking right here at the 50 and right here at the 618, and I'm looking at the confluence with a 9 EMA cloud, but on a 3 month or quarterly chart. All right. It's very, very safe to say that this cloud has worked since, let's see, by the time we got above it, you can see here, this was in 2010. And if we go back, you'll see how many years it worked above the cloud as well. All right. So it's safe to say that historically, all right, that the cloud is a lot of support. And I love that it is confluent with the 618 right now because the 618 is the golden Fibonacci. All right. So good buying opportunity, in my opinion. Use smaller time frames to stay long. And the reason why I say that is, again, use this information I'm giving you. It's fractal. Use it on smaller time frames to help you stay in this trend because it's not going to be easy. See, the quarterlies and the annual charts that I show you make trading look easy. But what we do know is that in this candle right here, for example, and that was the last quarter, Okay. And well, last quarter was pretty easy. All right. But I'm just saying like easier because the trend was really beautiful for a very long time. Um, what I will tell you though is behind every candle, I see a lot of people getting burnt and I see a lot of celebrations. But one thing is for certain, trading's not easy. Okay. So on higher time frames, things look a little bit cleaner. Smaller time frames can look a little bit chaotic. So when I tell you use the same scenarios that I'm teaching you and the same strategy and methodology, it's going to help you stay in that trend so that you can go back and look. But don't forget about the big levels that I'm teaching you. Apply those even to your smaller time frames because it could be you get lost in a 10-minute chart but you're coming up on the 496.58 and you're just, you're just so ecstatic and you're so happy, but you forgot there's a Fibonacci extension here, or vice versa, you're super fearful, you're scared, and you forgot about this video that I'm doing right now, and we come right into 465.37, and you get short there. And guess what? My team and I, we're probably getting long there. All right. So just again, remember these bigger levels. New fib extensions were placed for this quarter. The reason why I use them is we did take out the all-time high. It doesn't mean we're getting there tomorrow, but I just want you to know where the longer time frames are for uh, this potential continued move to the upside. So new fib extensions placed for upper targets over a longer period. Very important for you to understand that. Next thing we're going to go over is going to be the QQQ, and this is going to be the bigger picture as well. Okay. And QQQ, what I have to say here is just, this one's really straightforward for me. If we go back to last time that I did notes right before my cruise, the support mentioned on 0101, which I mentioned up here, okay, was indeed support, right? Um, and we closed out the week at 409. Price broke through the resistance of 405. Let's use that as short term support now, and the 386 remains long term support. A new pivot high, and we focus on the fib extensions on the right side of my screen, right over here. Guess what? A new high was made. Did you focus on the target up above? Just shy of our fib extension target as mentioned in our last note. Support now is 402.5 by 391, guys. You can see we were just shy of that 422.88. This is what I'm going to tell you. And I understand that there's a lot of space between these two levels right there, meaning this level and this level. I understand that, but I'm going to take you into a smaller time frame here shortly. And don't forget, I just showed you also the SPY and QQQ neutral strategy that you can also use as far as support and resistance go. This again is for the next 2 months and 7 days. If we can get above 422.88, look for 432. If that's too wide for you, go over to the neutral strat that I just shared with you. Okay? Everybody understand? Want to make sure. I only know that you understand if you go ahead and just give me a like on this video. I really appreciate it. Okay? All right. I really, really appreciate that. All right. Let's come over here and let's come right into, we're going to find the spot here. There we go. Right here. So we got to SPY. We got over Qs. We talked about that. There's not a whole lot to talk about. All right. And then we're going to get into the DXY and then into the TNX. Okay. So let's go to DXY. That is your dollar. And this is really important. Basically, listen, if the dollar's going up, beware on the long side. I don't use a quarterly here. I'm going to break it down into a weekly. We'll talk about this really quick. And as you guys all know, you've been big fans, big support, and I really appreciate that. So you probably heard a lot of this stuff before. We hit our supply zone a long time ago. It worked like we expected it to. It broke down. It came into the demand zone. We expected it to bounce there, and I love doing this. You can watch all my videos and see how accurate we are in our coaching. We came down into the inside out formation. Guess what? The dollar started to bounce. The market started to pull back a little bit. Then it pushed up. Then it pulled back. And then we ripped Thursday and Friday. Now, in my opinion, again, it's all technicals. I don't care about the news. Somebody's going to tell me, well, John, the reason why it went up was because these numbers said this and that. No, it's because the dollar hit resistance right here. We pulled back, the market pushed up, and that was it. All right. And the market again pulled back when we hit this demand and we started to move up. The dollar was moving up, and everyone's going to give you a reason. Well, the PPI said this and the CPI said that. Actually, dollar just came into demand, it started to rip, and the market started to pull back a little bit. So, what can you expect going into this week? We got the bid up as expected. Take more measures of caution if the dollar is able to sustain above the cloud. What cloud am I talking about? This cloud right here that is also confluent with the 50 of the down move itself. So again, what am I talking about? Roughly 103.85. Market can see selling pressure if price sustains above 104.60. Why am I saying 104.60? Because the golden Fibonacci. The golden Fibonacci states when we measure our trend, all right, and we apply these Fibonacci's in a downtrend, this remains a downtrend until price can get above there. Therefore, let's say that this happens, okay, and what would happen if the dollar starts doing this is that most likely, very high probability, that the market is actually pulling back during this time. If it cannot sustain above here and we get a hard rejection, then I would expect the market to start going back up. Okay, so things line up, just follow these levels. The next thing I'll tell you is that the bull market resumes if the hard rejection comes in and price on the dollar can sustain and stay under 102. Notice right now we are basically sitting at 103. I expect there to be some choppiness in the market. Okay, that is the DXY. Let's go ahead and move into the TNX or the 10-year Treasury, and we'll talk about that. And again, guys, my broad market analysis is really laid back. I don't mean to make it so long, but I did just get back, so I'm not at I literally just got off the boat this morning and then we drove all the way from New Orleans back home. And so I got my sea legs on. Things are a little rocky at the moment. So, and I'm also talking a little bit more than I would. So I apologize in advance, but I hope you're learning. I believe this is the range into the first quarter. I've been saying that for a while now. And anything over 4.8 is room for worry. Until then, I expect some volatility in the market. Update. We got the bounce as expected right out of the inside and out formation. I've been talking about this with you guys for quite some time. So again, the TNX started to bounce up here. You guys can see we ended the session at 4.14. And let's see. Just like the dollar, though, it is looking like it could get up and over the cloud. It's not a guarantee yet, but right above the cloud, we got a little bit of resistance. And right above the cloud on the dollar, we had the 50. All right, so there's resistance on both of these. So even if they kind of peak up and get into these areas, don't worry about it, especially if we get the hard rejection. I'd be looking for buying the dip in the market, but it is room for a little bit more caution, and we'll get into the reason why I say a little bit more caution. The skew, very important. If you don't understand it, please look it up on Google. The skew at the moment is at 148. I've been all over this. When I say all over it, I mean I know how to read the market, just like I knew how to read my dad's tone when I was younger. I knew when to press the gas and when not to. You know what I'm saying? So over here on the skew, it is at 148. And something I did a long time ago is I really broke the skew down. I learned to master like understanding it. I was given levels many years ago, and those levels not they don't quite work right now. And what I found is these levels actually work, and these are the levels we've been using here. And I have to say they've been spot on. And basically, this is usually when I want to buy. And if you don't remember, in 2023, we had a 200-point day in the ES futures, and that was exactly down here at the risk on. Now these are typical levels right here and right here where you want to buy the extreme. So up here, I'd be buying, puts to the downside 30 to 90 days out. And here I'd be buying calls 30 to 9 days out. But what happened, okay, just like back here in 2021, is that we decided that we're just going to park it here and really confuse the hell out of people because we're extremely on one side or the other, but not the most extreme, if you will, right? So extreme greed, extreme fear, we're teetering. between two major levels, basically 132 or so, 133, up into about 145, 148, somewhere in there, okay? And what we find is that it is a great opportunity to buy the market at this level, and it's a great opportunity up here, about where we are, to start saying, hey, pump the brakes a little bit. And again, it doesn't mean that we can't be long. I just think that we need to be long more from not only a higher time frame, but if you're wanting to trade from a week to week basis, that use some of these smaller charts that we'll be talking about here in a few minutes, and using that neutral strategy to kind of help you. But the more extreme levels are happening to the downside, okay, when this meter, if you will, if the skew reaches into this level. Okay, there's no doubt about it. If you guys were to put a SPY chart behind this, you'd see exactly what I'm talking about. Okay, you would see that the SPY, the Qs, whatever, once we come up into this range, it is a good time to start thinking, okay, a little bit of caution. But again, guys, as a disclaimer, I'm not a financial advisor. What I'm telling you is this: these are the things that I see. And when we come down here, it's a great opportunity for me to be looking at the long side. All right. But if you will, this is when everyone thinks we're crashing. All right. And over the last several months, this is the time when everybody thinks that we will crash. All right. And this right here is when everyone thinks overly euphoria, if you will. Very, very euphoric. So, again, these are your major levels if I didn't make that point already. Okay. All right, let's go ahead and move down into the fear and greed index. All right, and we're going to bring this down just like this. Here's your fear and greed index. Last week, I noticed that we only pushed up 1 point, so it was 71 last week. This week, we're into 72, and that's what we're looking at here. What does that mean? It means that we have more room to go here if we want to. We can always go to the extreme greed. It means that it's very rare that I see we go from like a greed all the way over here, unless we have some sort of catalyst that happens in the market that was unexpected, like any kind of news catalyst that just comes out of left field. But we are in earnings season. Things seem to be pretty stable. And because of that, I just don't see much happening. I mean, I think this could be a range in here. Maybe you get more extreme greedy, but if things pull back, we'll get more to the neutral side of things. Either way, all I see is like a buy the dip opportunity at the moment. Now let's go ahead and go into our futures. We'll be looking at Thinkorswim. Here we go. All right, so sorry guys, I was looking at our 2024 stuff for our projections. And let's see, we're going to come right over here into the ES futures. And I'll also be reading notes to you. All right. Now, before I get started, ES futures, very, very, very important. Okay. And what you're going to get from this is the fact that I like to run my portfolio, or when I say portfolio, it sounds so cool, but it's just, all I mean is my account. Okay. So if I want to be long in my account, then the ES futures and the NASDAQ futures I'll show you here need to be trending in the right direction. I need to understand where supply is, or if we're coming into any sort of resistance. And then I try to like start backing off of some of my positions. That's all I mean. So it doesn't matter if you trade futures or not. We do have a lot of future traders as well, but you got to understand this is my pulse of the market, if you will. Okay. So this is what we have seen so far, and these charts are updated again every week. So what's really cool about it is I don't change my mind. I stick with the plan, I stick with the methodology. You guys get to see the proof of concept. Here we are on ES Futures. Notice that the level here, the trendy edge, worked very well. We talked about that weeks ago. We came into the trendy edge. Now you can see, and I said this, and I know I said this week after week, I said what I expect is a move higher so that the 9 EMA becomes confluent with the trendy edge, and that's exactly where we are now. So just like that 618 and those levels I was showing you before, now I absolutely love the idea, if the market were to ever really pull back and scare people several hundred points down, I would definitely be looking for some love right here, or at this gap fill right in there. Okay, so two very, very important levels going forward. Now, the new support Okay, this was kind of a level at that previous all-time high. Now we build some support here. I told you your extension targets weeks ago. I'm not sure if we quite hit the extension target. We did at 48.71. You're welcome. And then the 38.2 is the next level I see, 49.09, all the way up to 5,014. All right. Now, this is your new support. It says now support, and I like to finish with it is support until proven otherwise. All that means, guys, is that if we come back here, I'd expect a relief bounce. If you don't know what a relief bounce is, you can check us out on a trial for $7. I mean, seriously, you get to watch us trade live every single day. You get to see our API alerts and all that fun stuff. But this right here is support until proven otherwise. And if that breaks down, then I'd be looking for this as support. Okay. All right, so I said buy the EMA if given a chance for a bounce. That is a note to myself that if we come down here, I want to know. Okay. The next thing that I said before I left on my cruise is that this week will really give you, because this was an inside week last week. This would really give you a quick observation if we're going inside and up or inside and down. And guess what? You guys would have saw there's no reason to go short here unless you were going for the neutral strategy for a couple points to the downside. But we got the inside and up formation. That means that we have now built a level of demand right here at the previous all-time highs. And that also means that between the previous all-time high and the 48.71 for me, from a larger time frame, so again, we're on a weekly, is for you to just like sit back and relax and day trade and use a methodology to day trade, have fun. But the major levels for me are above 48.71 and a half and or below 48.08. Everything else is intraday trading till proven otherwise. Bigger picture, above 40.80.71 brings 49.09 and so forth. Okay. And if we start to get up here, and let's just say that we get towards 4,900, then this becomes support and this becomes resistance. It's that straightforward. Now let's go into the daily. And because remember, the short trigger, we do not go short just because it says short trigger. We use a very specific plan to go short. Things have to line up. And again, in this bull market, these shorts are basically just opportunities to make some points to the downside if we see our indicators pop up there. All right, like the trendy turns. Okay. What I'm doing with the resistance level, I'm literally just putting it right above the high of last week. And far as the buy triggers go at 48.40 and 48.11, you guys can see here on a daily that your 48.11 is lined up with the trendy edge and the cloud. So again, I would expect some support there. And this 48.40 is basically just a line that comes in around a Fibonacci level and above this previous high right here. Okay. All right, moving on. We're going to go into the 4 hour. Now, I understand that this looks like a mess, but I promise you, this is absolutely needed in the case that we have pullbacks. For example, these levels were created a long time ago, okay? Especially this one and this one. We did these on the way up here, and we presented them every single week, and it's basically the same thing. If we come back here and we're staying in a buying trend, all right, or a bullish trend, then I want to be buying in these levels. Notice how price came back to the imbalance. And again, guys, we identified this back on December 11th. Okay, December 11th. So right here, you can see the calendar. We identified this. This is imbalance. And then price came back in January. All right. This is why it's so important to understand these and have a plan around this. And then boom, price moves up. Guess what? I just moved in and put a new box right here. This is pretty wide, 48.12 by 47.61. But again, it's just an area of imbalance. And matter of fact, what I did here, I'm going to bring this over and zoom in. What I did was I incorporated two inside and up formations right there. You guys can see that. Okay. So that is your new imbalance right here. And far as like targets to the upside, go to your higher time frames to understand where those are at. Now let's go ahead and go over my overall sentiment. Keep your eye on the 4 hour cloud as usual. So basically what I'm saying is these dips are buy the dip opportunity until prices start to stay under. And notice it looks like maybe last week price did stay under, but it only stayed under for a little bit. And if you used your trendy turn, you can see that we had a trendy turn come in. All right, right there. And if you waited, even if you didn't go long over with this, you could have waited until we got back above the cloud, went long again, and then boom, that's all she wrote. Okay. let's go over here into the NASDAQ. So once again, just so that I'm very clear on these, I'm saying I want to be looking at buying the dip as long as we can stay above the cloud, or I want a hands-off approach, pump the brakes if we start to close under that cloud and underneath these demand zones. So those green boxes there. Okay. Let's go into the NASDAQ. And on the NASDAQ, we are going to go and start with the weekly. Same thing. I can't make this stuff up. The support level has been here for you for a couple weeks now. It went bid right at the trendy edge. The 9 EMA is now confluent with the previous support that I showed you. But if we take this away, you will notice that we have an inside and up that formed off this previous base. It just kind of came up, built some, and then boom, popped right back up. We're going to leave this here because it's worked so many times for right now. Just understand if it comes back, it could be weaker, but I don't think it's weak. I really don't, because we had the 9 EMA there. This guy might catch up. There's just a lot of love in here. One thing that I may have to do is, build a new extension for you, because I mean, I wouldn't think that we could hit the 1618 this week, but who knows, right? But what I will say is there is a possibility we could hit the 100. The way that I want you to approach this is just simply look at it like this. If price right now can hold 17,393, then I would be looking for a push into 17,566. Again, anything to the upside is resistance until proven otherwise. This is not built off a structure. This is a Fibonacci extension, because I had to use that because we do not have supply up and to the left. As far as to the downside, again, smaller time frames is where I'd be looking for your support. Here on the daily, these are my trigger longs at 17,218, 16,906. Resistance, again, just that high from the previous week. And your short trigger around 17,786, which is the same number as this 100% extension here. Now, far as like the 4-hour imbalance, same thing that I did there on the ES futures. You guys can see I took this imbalance. I used two different inside and out formations, and that comes in at 17,253 by 16,948. And again, we don't go long here, just so everybody understands. We don't go long here and then put a stop here. This would be, I mean, you could if you're looking at it from a longer term perspective, but we have a lot of different things that we use in order for a crisp entry and or stop. Very important to understand that. I just want to show you the imbalances, and this was the imbalance that we had from before. And if you want to freeze the screen, you can do that too, and go ahead and add these levels. These are all levels of potential relief bounces, or in this case, really big rallies in this up market. Okay, so again, these things work really, really well. And that is not the end of the broad market analysis. I want to show you one thing before we get off of here, because I do find that it is important. Okay, so we're going to come down here just like this, and we are going to keep scrolling down. All right, so here's the VIX. I changed the cautions for this week. So if you will, please take note, $15.07. Yes, I'm one of those guys, kind of particular. And then $12.67. So if we reach either mark, I would expect volatility to hit the market this week. And then as we come down here, I wanted to remind you on my 2024 projection. Yes, the RTY hit one of our targets, or the IWM. So for you guys that don't understand futures, RTY/IWM. Okay, so the RTY for our 2024 projection that we did during our happy hour came right back down into our demand zone, and we got a nice pop there. So I need you to be paying attention to the bigger picture. All right, if you're paying attention to the bigger picture, that means you guys are really like killing some trades here. All right, so again, a lot of things, a lot of traders I see, and they get mixed up in the daily, like every 1 minute candle. Don't forget, there's another life out there with trading. All right. And it means like to just kind of sit back and like let the bigger charts work out for you. My reminder is this. Price came into 38.2, which also lined up with the demand. If this level holds, we could see a rally from small caps this week, ladies and gentlemen. So if you have any more questions about that, I'll talk about them as we get closer into tomorrow. Far as like right now, what I'm going to do is present the ES and the NASDAQ night charts, if you will, for our blueprints for tonight. I'll be putting those on my X account. And just as a reminder, if you are not following me on X, please do so. I'm going to put a couple videos out there tonight. And I'm also going to, so if we come over here, I'm also going to put um, my watches, all right, like Tesla, you know, and I'm gonna put Tesla out there because I think it's really important for you guys to understand what Tesla's doing. I think there's a buying opportunity. I think a lot of people have been trying to call the bottom, but I think there's a little bit lower of a bottom coming in. Now, I may most likely day trade it this week, have fun with equity. I've been successful doing that this year. I'm just kind of having a good time with it. But as far as options go, I think we could be looking at I'm probably going to start adding in on some longer term options. All right. And I will be playing earnings for Tesla. And if you never watch my earnings strategy, I also have that out there on my YouTube page, but you can pay $7 and come watch me do it live. Love to show you. Okay. I really appreciate you guys. Again, I've been on a cruise, man. I'm a little off. Um, you know, I've got my shaky legs right now. I really am a little dizzy at the moment. But I'm so happy to be back and here to teach and not only teach, but to lead you. All right. And I think it's very important that what I say, that I back it up and use real money. And you guys get to see that right here in the room. I can't wait to trade with you tomorrow. Have a beautiful day. We'll see you soon.